Hi everyone, it's David Pryor from Priority Funding and Forward Funding again. We've been doing a series of frequently asked questions so that I can help businesses when they're looking at funding options. Today we'll look at more general questions. We'll do 3 or 4 at a time so each video is not too long. Okay, so the first question for this session is, what happens if I repay my loan early? Great question actually. First of all, lenders always love you if you're on time with your payments, or even if you would like to pay it back early. Uh, Many lenders, not everyone, but many lenders will actually give you an interest rebate back against the remaining term. Okay. Now, sometimes it's not beneficial for you to pay it off early because you are still paying a portion of interest. I'll give you an example. So, if you have a loan where you're paying a total of $10,000 over 4 years, and you, after 1 year, still owe, call it $8,000, you may get an interest rebate of, call it $1,500 on that for the remaining term. If you were to pay it out after 12 months, your figure would be $6,500. Now, that would be the remaining payments plus a portion of the interest for the remaining term. You don't get all that interest back. Please know you don't get all that interest back. It is beneficial for you, but sometimes early on in the contract, it may be a better idea just to let the direct debit happen and let it happen slowly and keep things going. Next question. Will consolidating my business debt affect my credit score? Two answers. Effectively, if you consolidate your business debt, tax, bills, credit cards, all those sort of things, then when you do an application for it, then of course there's going to be a credit search done. But people don't realize that 3 to 4 searches a year is actually healthy for a business. Financiers want to see that you're active in the market. You're doing finance, you're having trade accounts, you're doing things. So, and one-off search to do the debt consolidation is not a major problem for you. Okay. What are the risks of debt consolidation? Okay, well, if you're doing it in the background and you're using your property as security, let's use that as a very good example. Debt consolidation needs an asset or something to secure the consolidation of debt to start with. The risks are, number one, you won't get it, but if you're keeping your payments up in the meantime, that won't be an issue for you. Secondly, if you need to debt consolidate really, really quickly, then there are lenders out there who will do very fast mortgage facilities, but they are rather expensive to do, and there is a shorter time for it to be done, but you have to weigh up the risks and the benefits. In another video, I'm going to talk about specifically private mortgage funding, so that you can actually see the costs that are involved, the benefits, and then how we'll pull you out of that facility within 3 to 6 months. That's a pretty standard way of trying to look after people. What happens if my finance equipment gets damaged or stolen? Great question, actually, and we've been doing this for 30 odd years. So there'll be many occasions where a car has been damaged, or goods have been in a house and have been fire, or something along those lines. Okay, so number one, it is absolutely imperative that every piece of equipment that you finance is insured in some way. If you work from home, you cover under your home insurance. If you work from a premises, you have your premises insurance. And if it's a large piece of equipment which has a large finance function to it, then what you're going to do is to actually note the lender on that policy so that they're the first to be paid out, so you're not left with that debt. But every piece of equipment must be insured to make sure that you are protected and the lender who's giving you the money for that equipment is protected as well. The last question for today's video: is it possible to secure an unsecured loan in the absence of any credit history? Fascinating question. Okay. A lot of people do not borrow because they cannot afford to borrow. Fantastic. Excellent. Good strategy. Okay. When you start a business or when you've been in business for a number of years and you don't have any credit history, it then becomes a little bit more difficult to actually show a lender your capacity to repay. Okay, so it doesn't mean that they're not going to lend to you, but they are going to do some more searches, ask a few more questions, see your history, see what security they can bring in to actually help to create a profile that they're comfortable with. Okay, so I suggest to most people in business that they should have, number one, a couple of applications, as I mentioned earlier in this video, but also one or two trade accounts or finance facilities at any one time within their business. It can be a lease of a car. It can be something which shows that you have the capacity to repay. You have the character to repay. Lenders look at capacity. They look at character. They look at the person. Are they going to give me my money back? That's what they look at. So those are the main things you look at and say yes with a minimal information on your credit file. Yes, it can be done, but we will ask a lot more questions. That'll do for today. I'll see you on the next slide for the next video. Thank you.